Hello and welcome and welcome and hello and welcome. My name is Danny Deals. Thank you for tuning in to Un Poco Mas, the show where we give you and you and you and you and you just a little bit more. Today is Thursday, August 3rd, 2023. It is 12:51 p.m. out here in beautiful Los Angeles, California, and today we are talking with you about SoFi Technologies Inc., ticker symbol SOFI, and it is super terrific. On the day, the SoFi stock is down 7 cents or 0.69% on volume of approximately 35 million shares. The stock has ranged today from $9.86 to $10.17. And guys, we have a SoFi classic for you today. It's a modified mountain and hump pattern. We got kind of a double peak on the mountain, had that initial run up that, if you guys have been following this stock, oh so well, just ran up for about 5 minutes, fell all the way back down to 994, did another mountain, ended in 30 minutes, 10:04 a.m., which is quite common, had that hard sell off all the way down to 986, popped back up very quickly as it's wont to do. And instead of doing the traditional hump that it normally does, it basically traded algo sideways about 10:07 and then kicked down, was trading on the algo at exactly 10, kicked back up a few pennies here in the last few minutes. But guys, this is just algo dominated trading to kill these call options that they dumped. This was pretty clear, guys. They did a dump and pump and dump. They dumped a little bit before earnings, did a huge run up after earnings. Not only sucked retail into the shares of the stock, which they then dumped on them the next they brought them in, and then as the market makers were dumping there at the highs at $11.50, $11.40, retail was coming in on FOMO. So they killed retail two ways. They ran that pump and dump Monday and then dumped on Tuesday. And then also they ran up the options, these short-term call options, way up. On Monday, these values were insane, like plus 100%. They dumped all these call options on retail schmucks after they hedged their position and wrung out all the profit. And now you can see, guys, there's very few calls left open at $9.50. Obviously, those calls would be in the money. They're calling 10 in the money right now, but it's not. It's zero. Those went down 33% today, 17,000 calls. The 1050 calls are down 58%. The $11 calls are down 50%. And there's some pretty significant volume with all those calls. Guys, taking a look at the chart just very quickly, I would submit we are still firmly in an uptrend. Anytime I look at these charts, guys, and I look at a trend line, I like to see multiple data points. The chart just bouncing off the trend line is not nearly as convincing to me as if the stock price consolidates in an upward or downward movement along the trend line. And at the start here, guys, we see a lot of data points connecting to this line. Then we had the run up where they shorted, came back down. We had some consolidation here, pushed back up. Again, three data points consolidating along the trend line. These are candles. This thing is a 1 day interval on a 3 month chart or 6 month chart, but I've been zooming in and out. Pushed back up, and then again, 3, 4 candles here. We see consolidating along the trend line, hard push up. So, guys, every time we see some candles consolidating along this trend line, we get a push up. We get a push up. We get a push up. There has simply been absolutely no appetite to sell the SoFi stock under this blue trend line since the middle of May, and that trend is intact. I'll show you over here again exactly what I mean, guys. We basically need to stay above this line, and we're golden. Like, ignore this, guys. This was a pump and dump. Don't be stupid. Remember, everybody's saying, the stock price crashed after the last earnings, went from 650 to 450. Yeah, but before this earnings, it was back up to 950, guys. That's not a crash. That's market mechanics. It's a scam. It's dump and pumps and pump and dumps. We want to stay out of this quadrant here, guys. This red quadrant, because this is where we're just going to go back sideways into consolidation mode and probably start trading down over over this trend line. We need to stay up above this trend line, which is basically the same as this trend line here. And I think we are going to do that. Guys, I want to talk about the bear case, the FUD. That we see presented both before and after this earnings report. I think the earnings report and the transcript blows a lot of this bullshit completely out of the water. I think a lot of it was basically crap before, but it worked to attack the SoFi stock because we did not have the data that proved this was all made up FUD and bullshit. Now we have the data. Just to go over a few points, guys, that I hear constantly. The growth is slowing, or they're inflating their membership numbers, or they don't count the membership numbers correctly. They can't sell loans. There's no demand for the loans. The values for the loans are exaggerated in-house. Forget the fact that they sold loans this quarter in Q2 for more than the par value. There's heavy demand for their loans, and there will continue to be. High defaults, charge-offs on personal loans. They criticize the personal loans. This is kind of where you get into the circular logic of the FUD chart bears, because they'll say, okay, personal loans are risky. They're unsecured. But then they'll go, well, you should be making more personal loans because student loans and home loans don't pay that high an interest rate, forgetting the fact that home loans, you make a ton just on the origination. But so if they're doing a lot of personal loans, they'll say that's too risky. If they're doing a lot of loans with lesser interest rates, they'll say they should be doing more personal loans because they make more. So whatever SoFi does, the bears are going to find a way to spin it as FUD because there really is no criticism that is valid and that is sticking. Student loans and home loans are small opportunities because of high interest rate. There's some validity to that, but home loans actually ticked up quite a bit on the back of the Wyndham Capital Mortgage acquisition and the technology they brought in there. Yes, student loans are going to suffer due to the high interest rate, but there could also be a number of borrowers that would like to refinance to extend the term of their loan and thus lower their payment. And they make a huge point in the earnings report that there's no fees, there's no prepayment penalties. So even if you refi over a longer rate, you can refi again when rates go down and it won't cost you anything. Also, you can go to a longer time period to repay your loans and then pay it off faster as you can, but you have the flexibility to make lower payments. But there are no prepayment penalties, so you can still pay faster just like you would have before the refi. Another criticism you see is it's just a bank, it's overvalued, and this assumes that the growth and Galileo have absolutely no value. SoFi is not a tech company. Looking at Galileo and Technesis, it has tech right in the freaking name. Granted, they didn't name the company Galicis or Technelio or, something clever like that. They didn't hyphenate it like, a realtor might. Hello, my name's Laura Barnes Farnsworth. I will be your realtor. Like, no, I don't need a double hyphenation. Laura Barnes Farnsworth McGetty. No, guys. Galileo is a great name. To me, it has a better ring to it than Technesis. Plus, Galileo was being left as an independent company operated as a wholly owned, subsidiary of SoFi. I personally believe, guys, that they're leaving. They're leaving Galileo as an independent company because I believe they'll spin that company off eventually and it will go public. And I think it'll be worth more than the entire company of SoFi. SoFi trying to get into the green today, guys, with 1 minute left in trading here on Thursday, August 3rd. Bears are obviously trying to hold it down, but we've had quite a bit of action here, almost 37 million shares traded, and the stock just down a penny on the day. Guys, I want to take a quick look at the short interest before I go over this earnings call transcript. I know it's been done to death at this point, but just one point I'd like to make, guys, and that is that the Office of the Comptroller of the Currency, who approves national bank charters, they said after I believe it was Lending Club and then SoFi got their bank charters that they were going to clamp down and basically not give any more bank charters to fintech companies, or at least make it a lot harder. So, Banking Dive, Figure withdrawals bank charter application. The blockchain startup applied for a charter in 2020, then included plans to seek deposit insurance after the Conference of State Bank Supervisors sued. Blockchain startup Figure Technologies is no longer seeking a national bank charter. This is interesting. Figure, which was started by former SoFi CEO Mike Cagney, withdrew its application for the bank charter Monday. Figure first applied in 2020, saying at the time a national bank charter would simplify the complexity of its business and allow it to serve more underrepresented customers. The Conference of State Bank Supervisors, however, sued the OCC to block the application's progress. Figure's application did not include plans to get FDIC insurance, and the CSBS argued that the OCC lacks the authority to charter a full service national bank without obtaining deposit insurance under the National Bank Act. Figure then updated its application to include FDIC insurance. While the CSBS dropped its lawsuit, Figure never secured a national bank charter. Quote, Figure has made the decision to withdraw our banking charter application as we focus on the organization on other areas of growth with a broad set of established bank partners, a spokeshole told the Bloomberg this week. The spokesperson has not responded to Banking Dive's request for comment. Yeah, they're going to work with other banks. This is what SoFi was doing, and it costs you more. You make a lot more with a bank charter. SoFi is proving that every quarter. And this former SoFi CEO just couldn't get the job done. He didn't have the minerals. So he withdrew the application. And that's what's happening with other fintech companies, too. They're not just handing out these bank charters. It's extremely hard to get. That's why SoFi showed incredible foresight buying that small community bank and going ahead and getting that transferred over ahead of all of these, problems with banking liquidity, Silicon Valley Bank, all this other stuff, all the bad bets they made on long-term bonds at low interest rates. SoFi does not suffer from any of that. Almost all of their deposits are FDIC insured. Their reserve ratios, all their ratios are incredibly strong. They have great liquidity. They don't need to raise money, and they are kicking ass. Figure has seen another challenge recently in the form of job cuts. The company last week cut 20% of its staff, or 90 employees. So this is a little, shit company anyway. According to Bloomberg, adding it to the ranks of many prominent crypto adjacent companies who have done the same this year. Well, SoFi does not rely on cryptocurrency. That's another FUD statement. It's like nothing. It's just an option they give some of their clients. I don't think that many SoFi customers actually buy crypto. I don't think they have a lot of their money in crypto. The SoFi investor has high credit score, high income, and that's why they're at SoFi, to get their money right. Um, but it's hardly all gloomy. It's also planning to take its lending arm, Lenco, public early next year. Cagney expects Lenco to land a $2.5 billion public valuation. This is a company with a couple hundred employees. What a rinky-dink bullshit company. They're going to land a $2.5 billion valuation. Show, Ajo, show. Also wanted to comment on SoFi Technologies over here on TipRanks. I did note we had some upgrades. A couple more have popped in. JP Morgan actually upgraded from 6 to 8. Bank of America upgraded from 10 to 1150. The Chode over at Credit Suisse, I think they were at 7 and upgraded 950. Citibank held firm. Piper Sandler held firm. Goldman Sachs held firm. BTIG down $1 to 13. KBW reiterated their 750. John Hecht and Andrew Jeffries both raised their target price significantly to $15 and $16. Vincent Kalanick raised, he's still a hold at 7 over at Stevens. But it was something very interesting TipRanks did. Like a lot of these analysts that were 0-star analysts, they just put 3 stars in front of them. Like Mike Ng from Goldman Sachs, he was a 0-star analyst. He's wrong the vast majority of the time, but they just gave him 3 free stars. Same with somebody like the Chia Pet, who's one of the worst analysts in the country. He's wrong 60% of the time. His average return is negative. You'd do better pulling stocks out of your ass, flipping a coin, or throwing darts at a dartboard. But he was a 0-star analyst yesterday. Today, he's a 3.5-star analyst. The bologna sandwich. Giuliano Bologna, the forehead, the beak who speaks. This forehead, this drive-in movie, he was, again, a 1-star analyst. He's wrong the majority of the time. He has only 90 rating. But how are you in this job if you're wrong the majority of the time? The guys with the higher percentages, Dan Dolev right 52% of the time, not that great. Reginald Smith 50. This toolbox from Morgan Stanley, he's right. He's wrong almost all the time. Bank of America, Mahir, he makes money. He's right 57% of the time. This guy's 51, so he's kind of on the fence. They have him as a 5-star analyst. Don't really see that. Ashwin is solid 5-star, right 60% of the time, 63%. And then if you look at like Andrew Jeffrey, he's right 67% or more than 2/3 of the time. John Hecht, 63%. They both, 13 and 11% average gains on their trades. Somebody like the bologna sandwich, he is wrong the majority of the time, yet again. So, guys, that's just sort of an odd kind of thing that came across on TipRanks. They just gave all these guys 3 stars all of a sudden. When they had 0. Don't really understand why. But guys, just wanted to address the earnings call transcript. I've had the opportunity to read over it a couple of times now, and just wanted to address it vis-a-vis some of these FUD points that we went over a little bit earlier. So just keep these points in mind while we're going over the earnings transcript. And again, one thing I'll note, the conference call participants, notice who's actually there. Jeffries, Mizuho, KBW's, bearish, but at least they're there asking a question, as is Kevin Barker with Piper Sandler. Jeffrey with Truist, Bank of America's there. Reggie Smith with JP Morgan's there, raised from 6 to 8. Hey, it's a begrudging raise, but it is a price target raise, so we'll take that. Oppenheimer's there. The Chode with Credit Suisse is there. Robert Wildhack with Autonomous is there. Autonomous Research. Robert Wildhack. That sounds like a made-up name. But notice who's not there, guys. Notice who's not even bothering to be on the call. The bologna sandwich. That forehead is out eating birdseed and, doing his second job as a drive-in movie screen. And, of course, the Chia Pet. He doesn't, he's not going to bother to be on the call. And he just lowered guidance the other day, too. He's saying, like, the company will make like 2 cents next year, and then they'll be making 33 cents a share for the whole year by 2026, I believe he said. What a piece of absolute feces, guys. I mean, I can understand if you want to come out and put a $7 price target on the stock, $8. I disagree with you, but to come out and rate the stock at 250 and then, keep re-rating it over and over again at 3 and doing earnings revisions over and over and over just to get your name out there. Look at me, it's David Chiaverini. Look at me, I'm a 0-star analyst. I'm wrong the vast majority of the time. I never get any sun. I need a new prescription for these stupid glasses. Anyway, guys, I don't know if that's what he sounds like, but it's just an interesting exercise to look at who's there and who's not. Like, how are you going to be an analyst covering a major, fairly major stock like SoFi, and then you're not even going to participate or even be at the fucking earnings call? I mean, what kind of analysts are these? They're hacks. And I submit again, their job is not to try to be right, because if they were trying to be right, how would they have a job if they're wrong 2/3 of the time? How would they even have a job if you're wrong 60% of the time, like the Chia Pet? The Chia Pet Army. Guys, anyway, let's get into the conference call, and I'll just do a little bit of commentary on it. I know this video is already going long. I'm going to try to keep it under 30 minutes, if at all humanly possible. Guys, let's see who's here. Good morning. Thank you, SoFi second quarter. I'm not going to read every word, guys, but I'm just going to go through it quickly. And then if you guys have any questions, if you have any comments, any ideas, any thoughts, anything you think I got wrong, please let me know down in the comments. I really appreciate it. Anthony Noto, thank you. Good morning. SoFi marked 9th consecutive quarter of record revenue. That is very impressive, guys. Most of the time, you see some dips, you see some headwinds. SoFi has been able to work through everything and turn in 9 consecutive quarters of record revenue. And 4th consecutive quarter of record adjusted EBITDA. These results were bolstered by record revenue in both our technology platform business and our financial services, fueled by record member additions coupled with strong monetization trends. Achieve these results despite market volatility, industry disruption, reflect the unique diversification of our businesses and the strong execution by our world-class team. Excited to discuss what we've accomplished. A few key financial achievements: record net revenue, $489 million, up 37% year over year. Guys, does that sound like a company that's not growing? Raising net revenue 37% year over year. Record adjusted EBITDA of 77, representing a 43% incremental margin and a 16% consolidated margin. I know they're trying to get that consolidated margin toward 20% eventually, and looking pretty good at this point at 16%. At the company level, we saw an incremental GAAP net income margin of 36%, which resulted in a loss of just $48 million. At SoFi Bank, we had over $63 million of GAAP net income at a margin of 17%. From a balance sheet perspective, our unique value proposition in SoFi continues to fuel high-quality deposits that increased by $2.7 billion sequentially and ended the quarter with $12.7 billion in deposits. Guys, so they increased deposits 27% one quarter. Okay, 27% in one quarter. And again, they're going to tell you that's not annually, that's in one quarter sequentially. And people are going to tell you this company's not growing. They're full of shit. Importantly, by more than 90% of our consumer deposits are from sticky direct deposit members. So that means this is going to keep growing and growing and growing and accelerating as they add members to SoFi Money, SoFi Bank. And nearly 98% of our deposits are insured. So you have absolutely no worry there with, any problems with uninsured deposits from wealthy customers. We don't even have any business accounts as yet, which isn't a good thing, but at least, those were a lot of the companies that got destroyed in Silicon Valley. Nonprofits companies had a lot of money in the bank and obviously was not FDIC insured. Our cash and cash equivalents, excluding restricted cash, increased by $528 million since March 31st to $3 billion, reinforcing our strong liquidity position. And you see that theme over and over and over. I remember when the Chia Pet came out in his ridiculous Q1 short attack FUD coordinated illegal. In my opinion, I don't have evidence that the guy's an actual fraudster and a criminal, but look at the evidence yourself. You've been a buy. You had a $20 price target on the stock not too long ago, $8 buy, all the way through. They turned in a relatively good earnings report, and you downgrade twice all the way to $2.50. Is that an honest analyst, or is that a hack who's out to be dishonest and serve the short seller FUD bear turd community? You have to make up your own mind on that. I just don't have any evidence either way, but everything I'm viewing says the guy is a dishonest, disreputable hack, and he is wrong on purpose because that's his job, is to manipulate stock prices and not to give honest analysis. That's what I see. I don't have proof of that, but that's what I see. That's my opinion, and I'm allowed to give my opinion. Adjusted EBITDA of $77 million exceeded stock-based compensation expense of $76 million, and that is pretty rare for SoFi. Lending net interest income of $232 million exceeded lending direct attributable expenses of $139 million, and that is a nice margin. Financial services contribution loss improved by $20 million versus Q1 to a loss of only $4 million, well on its way to reaching positive contribution to profit. From a member and product perspective, I would highlight the following: added 584,000 new members, bringing the total members to 6.2 million, up 44% year over year. Guys, does that sound like a company that's not growing? Up 44% member adds year over year. And a lot of the FUD spreaders out there are like, well, they count members as anybody who comes on to do a free credit check. Most of these people don't even make SoFi any money. Absolute bullshit. Then where's the deposit growth coming from, guys? Where's the product growth coming from? You see the company marching toward profitability. They're clearly making money from these customers, and yet the FUD spreaders are out there. Well, a lot of these people are just there to get a free credit check. Why would you go to SoFi and sign up for SoFi to get a free credit check? Every single credit card I have, American Express, Discover, Chase, Bank of America, every bank account I have, Credit Karma, Credit Sesame, they all offer simple free credit reports. Why would you assume that customers are just going to SoFi for credit reports and Relay? And by the way, the Relay customers, if that's all they do not directly contribute profit or revenue to SoFi. They are gaining a ton of data. They are mining all their data. They connect all their accounts. They're going to be able to market to those customers extremely effectively, and those customers will pay off, turds. They will pay off, turds. So in Q2, bring total 6.2 million, and as far as products, reached the highest quarter ever, 847,000 new products to 9.4 million, again, up 43% year over year. So members up 44% year over year, products up 43% year over year, and the FUD spreading turds are going to tell you there is no growth. The growth is slowed. The growth is static. You tell me another bank adding 44% new members, 43% new products year over year. Customers, members, whatever you want to call them. You show it to me. I don't think you can. Not at this size, not at this rate. Financial services products, and of course, New Bank in Latin America. Different story. Also a good company, but I won't go there. It's neither here nor there. We don't have time to go into New Bank, but I will do that soon, working on it. Financial services products, 7.9 million a quarter, grew by 47%, while lending products of over 1.5 million were up 25% year over year. And lastly, strong growth due to increasing word of mouth reality of SoFi's products and our efforts to drive greater unaided brand awareness. For example, our recent Changing the Face of Finance company, which is challenging society's gender bias with respect to women in personal finance, has resulted in over 72 million impressions in the first 5 weeks. We have driven this growth with improving efficiency as our full suite of differentiated products and services continue to resonate with both new and existing members. I'd like to spend time touching on segment level trends. Lending adjusted net revenue, 322 million, grew 29% year over year. Personal loan business maintained a strong, originated a record 3.7 billion, up 51% from the 2.5 billion in Q2 2022. Our underwriting model and our focus on high quality credit have resulted in dependable performance of these loans, as our annualized net charge-off rate was lower quarter over quarter at 2.94%. Guys, annualized net charge-off rate lower quarter over quarter sequentially, under 3%. With student loans, we had another quarter of low origination levels, but for the first time in 3 years, we have clarity in the business. With home loans, we nearly tripled our origination sequentially, aided by increased capacity and capabilities via our small acquisition at the beginning of the quarter. Increased capacity and functionality allows us to launch VA loans, helping deserving veterans find homes and exclusive rates, no origination fees, no down payments, and dedicated loan officers. And remember, Anthony Noto, military academy man, top of his class in engineering, trained as an Army Ranger. He's a veteran himself, taking care of the veterans. Love to see that. We continue to fully leverage the benefits of our bank license to drive great economics. And remember, guys, we just told you with Figure, they're not giving out new bank charters. SoFi got in under the wire. SoFi is winning. SoFi timed it. SoFi is kicking ass and taking names. As of the end of Q2, 50% of our loans were funded by deposits, and our 2.7 billion of new deposits raised in the quarter was essential in funding our 4.4 billion of total originations in the most cost-effective way. Our lending capacity remains robust, with over 20 billion in total capacity to fund loans and meet our liquidity needs. 13 billion of deposits that have grown by over 2 billion a quarter, 3 billion of equity capital, and over 8 billion of warehouse capacity. And they have not even used half of that warehouse line. Lastly, the bank continues strong growth, SoFi Money members, high quality deposits, and increasing levels of spending. This has led to high average account balances, even as average spend has increased. SoFi Money members have increased nearly 47%. This is why the idiot's saying that the credit check customer, there's no growth from the important customers that are driving revenue. SoFi Money members have increased 47% year over year to 2.7 million accounts. The average FICO score is 747 for our direct deposit portfolio. We see ample opportunity to cross-buy. More than 50% of newly funded SoFi Money accounts are setting up direct deposit in the first 30 days. Which has a significant impact on spending. Q2 annualized spend was over 2.7 times full year 2022 spend, and Q2 spend per average funded account was up 13% sequentially quarter over quarter. Within financial services more broadly, net revenue tripled year over year to 98 billion, grew 28% sequentially from Q1. The first is strong. Significant revenues growth is driven by 3 factors: strong member growth in SoFi Money, Invest, Credit Card, and SoFi Protect. The second is cross-buy, as a growing member base takes full advantage of our platform. And third is monetization. Revenue per financial services product has doubled year over year to $50, driven by higher deposits and member spending levels in SoFi Money, greater AUM in SoFi Invest, and stability within SoFi Credit Card spend. We expect all 3 trends to continue the growth momentum. Despite the continued investment in customer acquisition, we have improved the profitability of the financial services segment. The contribution loss was just 4.3 million, which is 20 million improvement over the Q1 2023 loss and 44 million in Q4 2022. We're seeing significant improvement in unit economics. The improvement in variable profit, and guys, this goes on. I'm not going to read every single word. You can read the transcript yourself. But the bottom line is they are slaughtering the FUD. They are neutering the bears. They are killing the sharks. None of the stuff they're talking about holds up under scrutiny. The data proves that the bears are wrong and the bulls are right. It's just that simple, guys. I'm looking at the data. The growth is there. The liquidity is there. They don't need to raise money. They're having no trouble selling their loans. They're not having high defaults. They're just not. The data, look at the data. SoFi Travel represents, this is the next help their mission. So they partnered with Expedia. People are like, oh, that'll never get anybody to buy anything. No one will use that. Guys, you get 3% cash back on the travel bookings when you do it with your SoFi credit card. So your entire vacation, the plane, the hotel, the rental car, all that stuff, 3% cash back, guys. If you're taking a $10,000 vacation or a $5,000 vacation, 3% is a very significant savings. You could go out and have a very nice dinner on that vacation with your cash back on your SoFi World Elite MasterCard. Just get out there, guys. Take a trip. Have some fun. Get off the internet. Go see something. Go do something. An oddity was no exception. They go on and talk about the IPO, how they make fees off that, how it drives growth to the platform. The technology platform record full segment revenue, 88 million, saw growth of 13% quarter over quarter with 20% margin at that segment level. So that's the margin they're shooting for. Importantly, we expect a year-over-year growth rate in the technology platform to accelerate by Q4 with increased contribution from the new partners. In Q2, Galileo signed 5 new clients. This was another FUD criticism. Galileo shrinking and made significant strides against the strategy with 100% of new clients bringing existing customer bases or portfolios. So guys, they're not signing up brand new companies where they have to just grow from scratch. They're signing up companies who are bringing existing clients to the platform. So they're getting revenues immediately, which drives much faster time to revenue generation compared to a startup company. Along with the growing pipeline of joint opportunities, selling combined Galileo and Technesis offerings into an expanded customer base. Technesis saw record revenue in this quarter and continued to make strides toward continued growth, bringing 4 clients live within the quarter. We've also experienced great product uptake in new products such as our payment risk platform, which helps reduce transaction fraud by leveraging our unique data and algorithms, as well as Connecta, our natural language AI-driven chatbot, which provides faster resolution of customer contacts and reduced contacts per customer for our partners as well as SoFi brands. I'll finish here by saying how proud I am of all of you, blah, blah, blah. Chris Lapointe, he goes on to talk about basically the numbers, of course. He's the CFO. Top line growth remains strong. Record adjusted net revenue, 47K. That's up 33%, 6% sequentially. So they just go on and talk about how EBITDA is 77 million, a 16% margin. The guidance was 50 to 60. Of course, they were sandbagging that. This represented 10 points of year-over-year margin improvement, demonstrating significant operating leverage across all functional expense lines. In fact, sales and marketing declined as a percentage of revenue for the 6th consecutive quarter, with marketing intensity approximately 300 basis points lower relative to Q2 2022. Overall, this resulted in a 43% incremental adjusted EBITDA margin year over year. GAAP net loss, 48 million this quarter, 48 million improvement year over year. We saw a notable year over year leverage in stock-based compensation, with SBC dropping to 15.5% of adjusted revenue versus 23% the prior year. Still too high, in my opinion. I want to get that number down under 10%, but we will grow our way out of that. Incremental GAAP net income margin was 36% for the quarter, which represents further progress toward our expectation of GAAP net income profitability in Q4 2023. We go through segment level performance. Guys, I'm not going to go through all of these numbers. I have been going on and on and on already, and of course you can read this for yourself. The critical thing, 2.7 billion deposit growth. It's unbelievable, guys. They were at 10 billion, now they're almost 13 billion in only one quarter, one of the fastest growing banks in the country. And that can be verified by the data on the government's websites, which I will try to link to in my next video. On the non-interest income side, Q2 originations 37% year over year to 4.4 billion, driven record volumes in personal loans, which grew 51% year over year to 3.7 billion. Student loan originations were down, home loans by 27% year over year. Macro factors continue to provide headwinds for these businesses, called high interest rates, guys, and student loan pauses. Macro conditions, that's an understatement. Second quarter, we sold portions of our student loan portfolio. In terms of execution levels, this is more FUD killing, guys. These sales in personal loan, we executed at a sale of 104.1%, excluding hedges, and 104.5%, including hedges. They sold all these loans over the par value, 101.5 for student loans, north of 104, including hedges. Home loans, 101.2, excluding hedges, 102. This quarter, we maintained our stringent credit standards and disciplined focus on quality, which led to continued strong credit performance. Personal loan borrowers weighted average income 164,000 with a weighted average FICO score of 745. In student loans 163, weighted average FICO score of 768. Um, on our balance sheet, 90-day personal loan delinquency rate was 40 basis points in Q2 2023, which is very, very low, while our annualized personal loan charge-off rate was down sequentially to 2.94%. Personal loan charge-off rate down sequentially. Down. The FUD is bullshit. It's made up. They're planning for 4.5. They're staying under 3. Bring it, turds. Bring it. On annualized 90-day loan, I will let you guys go through this. The lending business delivered 183 million contribution to profit at a 57% margin, up from 142 million a year ago, also at a 57% margin. Shifting to our tech platform, delivered 88 million revenue for the quarter, up 4% year over year and 13% sequentially. Not a great gain, but they have been kind of rebuilding this business, guys. Went over this last quarter. Galileo average revenue growth was driven primarily by Galileo account growth to 129 million. We signed 9 new total clients across the platform, delivered contribution profit 17 million, representing 20% margin, which is up quarter over quarter. We expect to see an acceleration year over year technology platform revenue growth by Q4 as we anticipate continued margin expansion. Moving on to financial services, guys, he will go through all these numbers, but I'm not going to go ahead and read the rest of LaPointe's presentation. I've read it to myself. Our second half guidance implies full year 2023 adjusted EBITDA 333 million to 343 million, above our prior guidance of 268 to 288. That's a huge increase, guys. Very, very bullish. Represents a 40 to 40% incremental adjusted EBITDA margin for the full year. Overall, we couldn't be more proud of our Q2 results and continued progress, having delivered 489 million adjusted net revenue, 77 million of adjusted EBITDA. We continue to make great progress on our long-term objectives and remain very well capitalized. And guys, I could go through all these questions. I highly encourage you to read these, but guys, with the numbers I just gave you, growth is slowing. The membership numbers are slowing. That's just not reflected in the deposits, the products, or the profits. It's a lie. It's bullshit. They can't sell loans. There's no demand. The values of the loans are exaggerated. Again, this is complete bullshit, complete FUD, complete nonsense, complete gibberish, complete shark talk. This is a bear peeing in the woods. They sold the loans. They sold them above par value. There's going to be more demand for SOFI loans than other loans because their borrowers are higher quality and you're going to have less defaults. It's just that simple, guys, and the numbers prove it. The data proves it. If you listen to the shorts and the bears, they never have any data, ever. All they have is speculation, fear, uncertainty, doubt, and bullshit. High defaults charge off on personal loans. That's simply not happening. Under 3%, way lower than they're planning for, way lower than the industry averages. I remember somebody was writing a FUD article and they're like, well, Capital One's having a lot of defaults, so SoFi can't be far behind. Well, Capital One's borrowers don't make 164,000 on average and have a 750 FICO score. Student loans 768 FICO score. Student loan, home loan, or small opportunities. Home loans have actually come up. That is a legitimate thing with student loans. It's going to be, it's going to limit the amount of refis because interest rates are so high. That's just a structural macro issue that we're going to have to work through, and then that will improve over time as interest rates come down. It's just a bank and it's overvalued. Basically, they're saying that the growth of 30% plus at the top line and 40% plus on a lot of metrics, that has no value. It's just like Bank of America or that are absolutely flat. So they should be valued on the same multiples. It makes no sense. And they put zero value on Galileo and Technesis, which they just paid like $2 billion for, and which, in my opinion, will be the fastest growth for the company in the years to come because it's the machine that builds the machine. You want to control the information. You want to run the damn thing. You want to be making revenues off of your competitors, guys. I mean, this is crazy that they place no value on Galileo Technesis. Like, well, it's just a bank. The whole company should be valued at bank multiples, forgetting that they're bringing in 20% of the revenue at extremely high margins. And as they land some of these big clients they're talking to, that's the other thing. Noto's like, well, we're talking to 12 major clients. Obviously, they onboarded 4 with Technesis just this quarter. It was like, well, he can say anything. He's just lying because when he worked at Twitter, Twitter got sued. And this whole thing about the lawsuit at Twitter, how they were inflating the metrics, guys, tech companies always do their best to paint the users in a positive light. They want to show growth. They want their stock to go up. They want to do all that. There's no indication that SoFi is committing any fraud, and the fact that Twitter got sued while Noto was there does not mean that he personally did anything fraudulent. He's not writing the algorithms, guys. And he wasn't the CEO of the company. He wasn't the board. He's not personally responsible for everything. So if somebody can show me fraud at SoFi, show it. But you can't. So you go back to these years old postings of some lawsuit at Twitter. Who gives a shit? Who gives a fuck? Guys, I have been going on for about 3 hours at this point. I am going to go ahead and stop this video. But guys, the short bear FUD turd case just doesn't hold any water in the face of this earnings report. It simply doesn't. The SoFi stock, guys, closed at $10.05. It looks like it's now 30 minutes post market. Going to give you a little update, up 2 cents after hours. So the stock is basically completely flat on the day, guys. And they're just looking to kill those options at 10 tomorrow. And then I believe we will move back up next week, which that price action should be reflected in the fundamentals, the substance of the ER. And at the end of the day, earnings fundamentals are going to win out, but we have to get to that net profit in Q4. So the shorts let go and the market makers stop playing games with the SoFi stock. Guys, Topper time check is 1:31 p.m. out here in beautiful sunny Los Angeles. It's August 3rd, 2023. We are talking SoFi stock, ticker symbol SOFI. My name is Danny Deals. The show is Un Poco Mas. For Hurricane Lopez and Stock Karen, we would like to say thank you very much for watching, and we will talk to you again really soon. Hope you have a great day and a great night. Probably no one is watching. If you are, wake up, wake up, wake up. Wake up. I'm told my longer videos are great for insomnia. Thanks, guys. Have a great night. We'll talk at you soon.